welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone had a great day, safe day. Let's make it a great night, folks. Market-wise, let's take a look at it out here. We have the Dow Industrials up 124, NASDAQ up 37, S&P's up 16, gold contract up $2.10, trading at $1,237 an ounce. Silver up 12 cents at $18.74 an ounce. Copper up 7 pennies at $3.15 a pound. Light sweet crude up $1.89 at $94.81 a barrel. Bonds, you have the 10-year up 3 ticks at 124.08. 30-year flat at 136.02. King dollar down 178 ticks at 84.22. The euro is up 21 at 129.61, and the yen is trading flat at 107.14. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? It's a trip, folks, no doubt. Cash S&P, what do you have? Okay, you're up 16 bucks. You're at 2,000, rejected lower price. That says game is going to be 201117 once again. That high is going to get tested. We go over to the Dow Industrials. We take a look at the Dow Industrials. What you have with the Dow Industrials, as one of our tigers just said, we just hit a high. Dow Industrials right now are up $1.25. You're at 17,156. And we hit 17,167, which would be a new high. Volume, what do you have out here with the volume? On the NYSE, we're dealing with 417. So what you're going to have is this. Okay, so let's get this up here. We'll get the last 3 highs up here. So you have the high that you're dealing with from July 17th. So you get July 17th was the first high. Second high was on 8/26. Third high was on 9/4. Correlation-wise out here, this is what we're looking at. So we go back to 7/17, and on 7/17, you're dealing with 705 million shares. You take a look at 8/26. Will that be next? 7/17 is 707.26, 705. 8/26, we're dealing with 512 million. That's a joke, no doubt. September 4th, we're dealing with 627 million. So we go back to it's the July benchmark. The July 17th benchmark is at 705. So you're dealing with these are the 3 highs that we've done thus far. MVOLNE. Okay. So right now we're at 419. What that would mark, folks, is that would probably come out with about 550, 575 at the end of the day. That is going to be challenging the 627 on 9/4 as well as the 705 on the 17th of July. NASDAQ Composite. We take a look at the Composite. Composite also has gone topside. Up 38 bucks. Now, it's not, we're down more yesterday than we're up today, but bottom line, has some juice behind the move. Composite will do today about, it'll do about 1.7, 1.8 million shares. We look at the SPY, the SPY, we have with the SPY is the SPY today is at 89 million shares. Yesterday, we did 76. The prior day on Friday, it did 117. The high that's generated up there is at 85. So the bottom line is that it looks to me that the SPY will go up there and test that high in the SPY, which is 201.52. It got back out of the lower range. The lower range is 199.06. We were at 198.50 today, and it did reject that lower price. The 3 Qs, the NDX 100, what you have with the 3 Qs, that is up as much as it gave up yesterday. Yesterday, it came down from 99.60 to 98.21. Today, you did 98.05, and you're at 99.51 right now. That's also putting it that, hey, guess what? That 100.46 can get tested. Gold contract. What we have with gold is this. Now, this is going to be really wild watching this shake out, because it's not like the gold contract had a sign of strength out here. We're at 1237. it has to get back inside 1241.70. The XAU and the HUI, however, huge signs of strength coming in the marketplace. XAU is up $1.40. We're at 93.09. That's after rejecting lower price, and you're inside the sign of strength from June 18th and June. That's what it pulled back with lighter volume, rejected that lower price, took off out of that area with some juice. The Gold Bugs Index, same deal with the Gold Bugs Index. Right now we're 221. It got as low as the 217, and what we had out here is that the low from the 18th was 220. The high there is the 225 here, 221.82. That says you're back inside the range, and not all these gold equities, but a few of them are showing major signs of strength out there. If you go over to Great Panther, you get a major sign of strength happening pretty quickly. And what you do have out here is that you have we have an own Great Panther too, folks. But if you do go the Denver Gold Forum, which is one of the biggest gold shows out here, professional gold shows, not a retail show. That baby is happening right now. This is the second day of it. It will be over today, but there's certainly some juice in a few of these equities. Bond market. Let's go over to the bond market. We take a look at, well, actually, let's go to oil first. CLV for oil market out here. 261,000 contracts. You're up $1.89, and that's not going to be enough contracts. So we're at 94.81. That can definitely get to this 95.89. That no doubt is a swing point up there. But what you have, yeah, well, we'll see how it tests that area. That's what it really comes down to. Bonds. We go take a look at the 10-year bond. 10-year bond out here, TYZ. 10-year bond right now is trading at 124.08. We have 1 million contracts, and it never made the lowest swing point. So I expect what you're going to see here, you're going to see some building of cause to get to higher price in this bond market. The lowest swing price on the 10-year, folks, is 123.12. Yesterday we hit 123.29, rejected that lower price. We go take a look at the 30-year bond. 30-year bond right now, USZ for what we have with the 30-year bond is that has 300,000 contracts. We are at 136.06. Now that's pretty neat because this is when you're looking at today's trading, it's like, okay, are you trying to get higher and this lighter volume, or you're pushing into the low? And thus far, the low of yesterday was 135.26, and we hit 135.30. So what you have, it's still a toss-up, but the bottom line is I expect that the swing point, I don't expect we're going to get to that swing point, which is 134.31. King Dollar. Let's go over to King Dollar. King Dollar has made quite a run. King Dollar looks like it's ready for rest here. King Dollar out here, down 188 ticks. That's a lot of ticks. It's not. 34,000 contracts. What I expect to see with King Dollar is this. King Dollar more than likely will come back to one of its signs of strength, which is 82.97. If you come back there with volume, you can very well get down into the 81.75 area. King Dollar had gone straight up from the 79.80 area up to the 84.65 area. Our phone number is 877-927-6648. Inside the Dow Industrials, let's see what's inside the strength inside the Dow. You have United Healthcare is up 130. American Express is up 124. Visa is up 298. ExxonMobil's up 130. You go to ExxonMobil, you take a look at ExxonMobil, dead cat bounce. Let's take a look at American Express. That hadn't been able to get out of its own way, even with the CEO on the cover of Barron's this week. Same deal. No big deal there. Visa, we take a look at Visa, and Visa wants to fill a gap. 877-927-6648. Dow Industrials right now up 119. Nasdaq's up 37. S&Ps are up 16. You stay right there, folks. We'll come right back.
The path of leadership Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Tom takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. You get the Dow Industrials up 119, Nasdaq up 37, S&Ps are up 16.5. Let's go over to our man, Mr. Basil Chapman at the Chapman Wave. And don't forget, folks, each and every trading day right here at TFNN, we start live programming at 8 o'clock in the morning. We go from 8 o'clock in the morning to 6 o'clock in the evening live. We replay that programming. You can get all of that on your cell phone at tfnn.mobi. You want a Tiger TV, just on your browser, go to tfnn.com. Hit the TV on the top right-hand side. You can get Tiger TV. Our man, Mr. Basil Chapman, is on each and every trading day, 11 to 12 Eastern Standard Time. And as you're over at TFNN, folks, right on the front page, what you're going to see is that we have a trading contest, a virtual trading contest. We're giving away $10,000 in cash. It is absolutely free to sign up. You can start signing. We started it yesterday. You have until next Thursday to sign up. I suggest you sign up right now. Bottom line is that we're going to be giving away $10,000. You have a first place prize of $3,000, $1,500, $750, $500. The next two, from 5 to 10, from 6 to 10 rather. It's going to be $250 apiece. All the details are on the front page of TFNN. Then we're going to be giving away $500 each day just for participating in the contest. Basil Chapman, what's going on?
Hi, Tom. How are you?
Doing great. You having a good day?
Yes, thank you. That's a really exciting contest you got going there. That's fantastic.
There's no doubt. They're going to have to be riding that wave, man.
Absolutely. And, of course, the waveform works in all time frames, so, yes.
So what are we looking at here? It looks like we're looking at the Dow, right?
We're looking at the Dow, and today's spike to, even though 17,161 was the high of the 4th of September, made a peak D. We pulled back. Everything right up until early this morning was matching the sixth session from the 17th of July's high of 17,151. Also a peak D. Everything was matching. And then suddenly, I don't know whether it was a news event or whatever it was, the Dow spiked, but it spiked 6 points higher to an all-time high. But that 6 points changed things in my weekly chart. And this is really going to be interesting. I'm going to spend a lot of time this evening and tomorrow dissecting this, because the way that the price spiked in the weekly chart, let me just go there right now, made a little bit of a change. Let me just change this chart right here to the weekly chart, INDU. And what we've got in the weekly chart is I can't really, I look for peak D, E, or F, and then there's a pullback, and
yes,
it would restart. And I have the last peak of 17,161 as an alternate counter, G/A. G says be really careful. A says that is fantastic. It is really bullish, but I don't really know until there's a peak, which there was last week. There was a lower high of 17,137. Below the 17,167 high, 17,161 high, and now we've just gone slightly higher. I don't have any choice at this particular point. I'm going to have to do a little work on this, but this looks like leg B. If it's leg B, that is very positive, especially with stochastic at 90% and the MACD flattening out, but just close to turning positive. That doesn't say you couldn't pull back, but it does say that the 16,033 low that was made should not be taken out before we make higher highs. So that's, on the one hand, that says, well, a very serious decline is probably out of the question. That doesn't say you can't have a pullback of 800 points. It's 5, 6, 7%. But what also happens in a case like this is it extends the monthly chart to leg E, and I have to then put it into the context of, wait, where's the S&P? Well, the SPX, the S&P 500, needs to climb. It hasn't gone to a new all-time high. The Dow is the only one that actually made this new leg up in the weekly. So the S&P has to go to 2011.18. This is, in my work, this is very specific. So is there an aberration? The Dow has done something that the others aren't going to do. I don't know yet. I will do my homework tonight. But I tell you what we did do for my subscribers. We've been short quite a number of the indices. We were short the IBB. And the big spike today came back up. So this morning we were looking great, and yesterday we were looking great because it went from 270, from the high short in the 273s down to 263. So we covered this today at 269, so we got a 4-point profit, which is a very nice profit. But what's interesting in the chart of the IBB, which is the iShares or the NASDAQ Biotech, which can very much, we saw it yesterday, can very much affect the QQQ, that's the NASDAQ 100.
Yes.
So what I'm looking at here is the indication to me is that the IBB is still looking very weak, and that this is a rally. I don't know what caused the rally, but whatever it is a counter trend rally. And until the IBB goes above 278.78, I'm going to treat it as that. And what's interesting is that the semiconductor, these are two very important sectors. The semiconductor and the IBB led the way up in this last big rally. And then they made peak Ds in the daily chart. So the semiconductor came from 52.55 all the way down to a low this morning of 50.62, sprang back to 51.58. So we were fortunate. We were short the SOXS, that's 300% short. So we were able to take a nice profit there. But the rally hasn't gone to the new high. So this is going to be very important. We've got the Scotland result coming out on Friday. We've got Alibaba. All I can say is that as far as I'm concerned, new highs in the weekly charts are very positive. If they fail to make new highs, then that's going to say the pattern that I was looking at earlier on from last week of a consolidation occurring should continue to consolidate. And if you're looking, I did this on my show this morning, my Tiger Technicians Hour. We went through Netflix, NFLX. That, to me, the Netflix is making some kind of a top here that could be quite a serious top. It made a 458 round number high. Let me just double check. Oh, no, it went above that 489.29 leg F, but the weekly chart looks to me like it's a peak E. So there are a number of momentum stocks that, to my eye and my reading, need to consolidate here. And so even though the Dow made that nominal new high, I'm still in the camp right now that says a consolidation is occurring. It's unfolding through this the sector rotation. They smacked the momentum stocks yesterday. I think they're going to go for them again. And we'll see what happens, but I'm making it real simple for subscribers. A new S&P high, I would have to say, okay, the consolidation will be very limited and we should continue going higher. And if there's a very sharp pullback between now and Friday because of the election result, we'll see what happens because the Dow is saying that we shouldn't break 16,333. So it's a fascinating period. I still see stocks that are looking good, and I still see stocks that are weak. And I think that as long as one does their homework, you can be both short and long in this particular market.
Yeah, well, it's going to be really interesting. And we have volatility in the markets. There is no two ways about that. And, as you used to say many times, the day's not over.
Absolutely. Yeah, absolutely. In fact, I wouldn't be surprised if towards the end of the day we've given back a chunk. So this is interesting. We're always I look at my Dow Quartet. Oops, that's the break. I want to look at GE because that's had a nice day today. So there's a mixed market right now.
Listen, folks, you can come over to our website at TFNN, go into newsletters, go into trading newsletters. You can test drive. Excuse me, folks. Basil's opening call, 2 weeks, absolutely free. Basil, have a great one, a safe one. Come right back,
folks. Thanks very much.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We get the Dow Industrials up 105, Nasdaq up 34, S&Ps are up 16. And if we go take a look at the Dow Industrials intraday, we'll walk through this baby. So what you had is this, okay, at, let's see, this year's 11:20 a.m. Eastern Standard Time. You had the expansion going topside. What that expansion was about on a fundamental basis, folks, was China was putting in 81.4 billion U.S. dollars, or 500 billion won, into their 5 largest banks. That was the expansion. That's what it was all about. Okay, so check this out. This is pretty cool. Now, we're going to go over and we're going to look at China, because last night, Shanghai had a huge problem. If we go take a look at the Shanghai market, what ends up happening at Shanghai, it just had gone from 2,000 to 2,350. Nice expansion, right? And then guess what? Boom. It dropped the level. We did 30 billion shares 30 billion shares. 3 billion shares last night. 3 billion shares. Shanghai goes from 23.47 to 22.94. If we put this on a 5-year basis, what you're going to see is that Shanghai just can't get up and over this 2,313 level that it's been trying to get over since June of 2013. And we bring this back a little bit further and put it on a 15-year basis. What you're going to see is that basically Shanghai can't get out of its way. So it's going to be interesting to see tonight what you're going to have in Shanghai, number one, and what the correlation is. So in China, what they've been trying to do is basically put a top on the property market. They haven't been able to do it. They've been trying to do it for the last 7 or 8 years. It seems like they have it going at a certain point right now. Now, putting $81 billion into the 5 banks would be like our Fed reducing the interest rate by half a point. This is what the difference is. The difference would be that they only reduced the interest rate a half a point for 5 banks. So what is that all about? Well, what that's all about, folks, is politics, and the largest companies and the most favored companies will get cheaper money. That's what it really comes down to. So we'll see how that shakes out in the context of how this market reacts. If we go over to the Dow Industrials for a second and we look at the spike, thus far, this is just a spike. It has about 40 minutes, and we have a 2-day Fed meeting, okay? And in that context, it's going to be really interesting because, you know, we had the spike in the Dow, and we're not going to have the volume. And we take a look at this. Yeah, we're at 457. We're going to end up with about 550, 560. The reality inside of this probably is all about Alibaba. not that I'm not saying that they put the amount of money in the banks for that, but what tends to happen is that when you get a large IPO like this, and in this case is the largest IPO that's coming out, what ends up happening is that somehow, some way, they can keep the market up. And when I say they, it's not like there's like 1 or 2 or 3, you know, entities that are doing this. There's a lot. Yeah, there's a lot of entities working for that. Now, they're going to have to really work really hard in the next 20 minutes. The reason being is that you have both sides of this market right now getting a taste after yesterday on the way down, because we came down yesterday and we came down with conviction. The S&P right now, the first sell into it when Basil was on was a decent sell. You know, you had that high up there, and whoever they threw some contracts into it. They threw 5,900. Actually, it's happening right now too. You know, so it's not that it's like high. It's only down 3 points, but they only have to spike this down about another 3 to 6 points. And what you'd have there, that yeah, you could get a test of the high again, but you'd basically get another failure, meaning that you try to get to a high. There's an operator sitting at the high. There's operators that are trying to push it up, but the strength is pushing to the downside. So if we go over to the Dow just one more time, let me look at this for a second, because I want to see, you want to see what the strength is inside it. So United Healthcare, so let's pull United Healthcare up first. That's up 123. We're trading at 87.26. And real price on that's 83.31. So that's not bad, but guess what? That's not going a lot higher. We take a look at the second. Intel was the second largest mover today inside the Dow. Well, Intel needs a lot more than this. It's 17 million shares. She needs something about 20, 30 million shares. Micron Technology, and this is the stock. Micron's been volatile beyond belief. Yesterday, it went down $1.35. It went down yesterday with 37 million. It's up with 24 today. And it can't handle price. Micron, good number, no doubt. It's come back as to what it gave up yesterday, but it's going to need a lot more juice to handle higher price. The last one, now this is we're going through the equities that are putting strength inside the Dow. The last one, GE, and GE is a dog, folks. GE is up 30 cents, and GE, we take a look at GE, and what you have with GE is that this hasn't been able to get out of its way for about 20 years right now, which is just amazing. You know, when I take a look at GE, so check this out. This is just, like, insane. GE is trading at the same price that it traded in 1998. How's that? And GE has a high volume low. I don't know what the heck's going to happen with GE, but it's going to test that high volume low. The high of the low is 1135, and right now you're at 2625. It's pretty amazing, though, when you actually take a look at something that is trading back from 1998, and you're talking to GE. And most of the companies that GE have spun off, by the way, folks, have been dogs, and basically it got taken to the cleaners. So it's pretty wild watching that whole thing shake out. Some of the high-volume stocks out here in a low-volume market. You have BAC. Oh, Apple. We got to go to Apple. So check this out. This is a big one. So Apple, folks, okay, the benchmark on Apple is 100.07. Today we went to 98.89. Volume's not bad. This 100.87 is a big number, folks. We'll see whether by Friday, if it closes under that level. What we have thus far, you're just over it. But this is the fourth week that we've been up here. And you get a close. And as we've been up here, by the way, okay, it was on lighter volume. Bottom line, it held price. If it holds price, it can go higher. You don't hold 100.72, it's in trouble. And today's Tuesday, yeah. Yesterday it was underneath it. We got to 96, rejected it, but had high volume. That means it wants to go back to that level. Today, volume's kind of light, actually, 61 million today. And all it's doing today is filling the gap from the gap down yesterday, which is pretty cool. So this gap down yesterday wants to get tested again. And that was quite a gap down. And this morning what you had is that Apple itself, that start taking the NASDAQ south. The IBB, as Basil was talking about, that's up $5 today. But what you have with the IBB is that she is at 271. She's coming into 1.3 million shares. Yeah, I can see her go try to test this 274 area. Gilead, G-I-L-D, which is the largest, waiting inside the structure. This little baby just doesn't, it's up 377, but it doesn't have enough juice. You're going into 15 million shares. You're going into 36 million shares. Celgene, C-E-L-G, what you have with Celgene out here, she is up 322, and yeah, she can test the 94.48 area, and right now you're at 92.68. What you will see, you know, let's see, so the Fed, first day of Fed meetings today, second day is tomorrow. That's S-H-L-D. Let's see what Sears. Sears is down 318. Oh, this thing is getting toasted. And that's after Eddie Lambert just lent the company, I think, $400 million. That's an ABC structure on the way down. And this was a classic high-volume high getting tested. We pull this back and put it on a, oh, look what it's doing. Okay. So Sears is at 30.36. There's a high-volume low at 27.70. We put this on a monthly. Now, if you want to just see how these high-volume lows get tested, folks, Sears is screaming. So with $30, $21. It's going after the $21 mark. It's going after the low from January of 2012. This is Tom O'Brien. This is TFNN. You stay right there, folks. We have the Dow Industrials right now up 110. NASDAQ up 36. S&Ps are up 16. Gold's up $1.30. We're going to be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. We get, let's see, American Express is up $1. You get Caterpillar up 6 cents. Oxy's up 34. You got Big Blue up $1.29. Hewlett Packard is up 2. Sprint is off 19. We get International Paper down 68. Walmart is up 52. We take a look at the oil and gas sector, what you have there, and that thing's been getting toasted. That's a dead cat bounce out here today. You got Exxon up 120. Halliburton's up 108. The financials just can't handle it. This is going to be interesting looking at the financials. So J.P. Morgan is up 8. You got Bank of America flat. Citigroup's flat. Morgan Stanley's flat. Let's go take a look at BRK, Berkshire Hathaway. Berkshire Hathaway is the largest weighting structure inside the XLF, and she is up 67 cents out here today. Hit a high of 138.99, which would be a new high. We've done 2.2 million shares. It's 2.5 million, so that's not bad. It's basically saying that, guess what, Berkshire Hathaway could move to higher price. We're going to take a look at Bank of America, BAC. What we have with BAC, that can't handle higher price. Morgan Stanley, MS, that's at a high, not any movement there. JP Morgan Chase, and that can't move either. It's going to be interesting watching this whole thing shake out. It looks to me, folks, that this is just a spike high. What a spike high specifically is this. When you get up into highs and you keep testing over and over again, which we've been doing, by the way, and we've been doing this since, you can make the cases this has been going on since July 3rd. July 3rd, the first high up there was 198.29. You come off that high. We stayed up there for 3 weeks. You come off the high with volume. You get to a higher high, dramatically lighter volume. And we're right next to the 201.68. A spike high would be that you get over the high, it lasts for all of maybe a minute, 3.5, 4 minutes, then gives it up. And what a spike high does is this, by the way. When you get over the high and it gives it up, it gives it totally up. So gives it all back, and then at the end of the day, you're at the lows, and that's it. And yes, how many times can it test? Many times. There's no doubt about that. The IWM, now what's going to get interesting here is the small caps. Small caps yesterday had come down with volume. We have volume. We have a lower low today in the small caps with volume. We hit 113.40. We're only at 114.41, and we've done 42 million shares. We've actually done more shares than the low of yesterday. Yesterday we did 41.6. So now what you're going to have is you'll have a weekly setup with high volume low no matter what happens. And we're right next to the August 1st low, which is 109, which is a high volume low. And then you have the high volume low at 107. So small caps at this particular point still look that they just can't get the juice to get to higher price. And the high that was generated in the small caps was the week of July 4th. The 3 Qs are going to be all about the Apple and IBB. That's my take on this, baby. That's what it looks like. Tesla basically took it south in a big way yesterday, TSLA. And what you do have is Tesla wants to go to a dramatically lower price. Today it's bouncing $7 on 8 million shares after coming down on 16 million. So that's setting up a small ABC structure on the way down. Elon Musk, he scored a big today. If you go over and take a look at Boeing, you're going to see that Boeing's not moving that much. But what did happen is that Boeing is going to have to share a contract for the NASA space taxi with SpaceX. And that's been going on for quite a while. And what that's all about, folks, by the way, is that right now the only ones that actually make our, what would you call, rockets are the Russians. Once we stop the shuttle, we sub that out to the Russians. Bottom line, you know the rest of that story. So Elon Musk was in front of Congress almost a year ago now, way before the problems that we're having with Russia right now, saying you're out of your mind, basically depending on this. And bottom line is that now what you will have is that that contract is a big number. So let's see. So Boeing and Elon Musk's space exploration technologies will share a multi-billion-dollar federal contract to help restart U.S. manned space flights and reduce reliance on Russian rockets, a congressional leader said. The two companies will split the award, being unveiled by the by NASA later today. The funding plan caps the competition for the right to build the first U.S. manned craft since NASA retired the space shuttle in 2011. Let's see how much. It doesn't say how many billions it's going to be, but the bottom line is that huge problem when you start basically subbing out something to someone that is going to not basically come forward and get it done. Market-wise out here, let's see, volume-wise, this is what we have. You're coming into the close, you get all of 2 minutes into the close, you're at 513. Yeah, it's going to come in about 575. So 575 is going to be a test of July 17th high versus 705. What I do expect you're going to see out here, you can get another test of the high. Why? Because you're so close to the high, number one. You get the Fed meeting over here, number two. What is intriguing out of all of this, and this, is that we had gold and silver reject lower price, had lighter volume. Silver is already back inside the larger range, the higher range, that is. Gold has another $6 to go to get back inside that range. The equities themselves, though, folks, the gold and silver equities, they're acting really sweet. Inside the context that you tested the June 18th, June 19th, June 16th sign of strength as you pull back. Did it with lighter volume, rejected lower price. Go topside, and as you went topside, let me see this. As you went topside, you're getting some strength. I think, let me see this. This would be too bad if this happened. Okay, correct. British vote, 48% yes and 52% no. So it looks like Scotland's still going to be, this is just coming across the tape right now. So let's see. Yeah, it would be. It would be like 8, like it's like midnight in Scotland right now. So it looks like Scotland's still part of the UK. Sad but true. It's Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow Industrials right now are up 104. You get NASDAQ up 35. S&Ps are up 15.5. We're going to be right back, folks. Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. This is Arthur Unknown. Expect the best. Believe something good is going to happen, and usually it does. Market-wise, let's take a look at it out here. We have the Dow Industrials up 100, NASDAQ up 33, S&P's up 15. Gold contract up $1.20, traded $1,236 an ounce. Now, what you have with gold, folks, is this. We haven't got back inside the larger range yet. Gold broke the June lows last week. Did it with some decent volume. It's trading into, when you take a look at the GLD, what it's done is this. We bring this baby back, and what you're going to see is that it's trading into the lows of December of 2013, as well as the lows of June of 2013, dramatically lighter volume. Silver. What did silver do? Silver got back inside the range. Go take a look at silver. What you're going to see with silver is this. Silver broke the swing low last week. Got to a price point today of $18.85. Inside the range is $18.70. We're at $18.72. Just barely made it, but guess what? You're back inside the range. XAU, HUI, went topside today with juice behind the move. What does that set up? What that sets up, folks, is this. You got into and the XAU and the HUI, you got into the June 18th sign of strength, rejected it last week with lighter volume, move higher today. The divergence is still inside the metal versus the equities, but the equities not only have rejected lower price, a couple of them had a really sweet sign of strength out here today. If you're in that market, you can expect higher prices coming at you. Bond market. Well, actually, let's go to oil first. What we have with oil, when you take a look at oil, what you have with oil, oil is up $1.89 out here today. CLV, where is she? CLV4. So oil today was up $1.85, 267,000 contracts. What that does set up is going to go test that swing point up there at $96. Right now, you're at $94.70. Bonds, the 10-year and the 30-year bond refused lower price yesterday. Today, it couldn't hold price. I don't expect that we're going to be down into those lower prices. Those lower prices, by the way, in the 10-year is the 124.07 level. And we'll see how that shakes out. But bottom line is that it seems to be not able to be enough weakness to get into those lower levels. King dollar. What do we have with King dollar? So King dollar backs off slightly out here today. King dollar looks like it's going to be taking a rest. That will give some strength inside the metal market. Well, what it would do is that it's going to give the metal market time to move. King dollar had an extraordinary run, 79.70 up to the 84.65 level. I expect you can back off pretty easily to 82.97, and that's a back off with lighter volume. King dollar does want higher price. Our phone number is 877-927-6648. Give us a call, folks. I know what's going on in your world. And if you were with me last hour, folks, right at the very close out there, I had said that it looked like the noes versus the yeses in Scotland had won, but what that was an opinion poll. It came across Bloomberg not as an opinion poll the first time, and then they put a correction coming across it. The bottom line, I guess that election is not for another couple days, so thank God for small and big miracles. S&P, what do we have with the S&P? This is what you have. Cash S&P goes up $15 today. We're at $19.99. Your high out there is the 2011. We did 646 million shares versus 705. The Dow Industrials made a new high out here. I expect it's going to basically try to tag that high once again. We closed under the highs. The highs are 117.161. I expect you'll hit that again. Now, thus far, what you do have is that the high volume high that is the most important is the July 17th high. That July 17th high is where we had 500 million shares. It tried to make a high again on the 26th of August. It failed. It only had 512 million. It tried to make a high again on September 4th. It failed. It had 627 million. And today we had 646 million. I expect it's going to try to get into that. The strength inside the Dow Industrials today was United Healthcare, Visa, ExxonMobil, and Intel. There was basically almost every stock was positive inside the Dow. The only one that wasn't was Nike, was down 41 cents. That was it. You know, all 29 of them were strong. What wasn't strong today for a market that goes up like this were the financials. The XLF couldn't hold price. XLF today up 10 cents, no juice behind the move, 31 million shares. What the move higher on a fundamental basis, on a news basis is that at 11:20 hour Eastern Standard Time, you had China put 500 billion won into the system. That's approximately 800. It's 81.4 billion U.S. dollars. So 500 billion won is 81.4 billion dollars. And they only gave it, though, which is going to be really intriguing, to the 5 largest banks in China. What that would be like, that equals a 0.5 point reduction in the interest rate, and that has to do with the regulatory as to how much money the banks have to hold versus push out. But that money was put in there not to basically for those banks to lend to the property market. That money was put in there for those banks to lend out, however, to industrial production companies. So what the difference is, which is pretty dramatic, is between politics and favorites and countries that basically have those types of rules. We'll see where that shakes out. Last night, certainly in Shanghai got whacked last night. Shanghai was down 1.8% with big volume. So I'm sure that like anything else, the central banks are trying to hold these markets up. Shanghai, of course, has not put as much money in even our own markets have. But we'll see whether that can basically hold it. My take on all of this is that it's going to be a spike high. The spike high, if we take a look at the SPY, you had juice in it today, 112 million. So what that means is that it is going to test that high once again, which is 201.58. So we've been at the same level here since we've been at the same level since July 25th. Well, it's going to test it again. We'll see whether it can take it out. That's the real bottom line. You did have an expansion of volume today on the SPY. It did 113 million. You go over to the 3Qs. You take a look at the 3Qs. What we have with the 3Qs is that did 37 million shares, up 86 cents. That didn't get to the high of yesterday, which is 96.90, 99.90. Folks, as you're over at TFNN, what you're going to see right on our front page is that we just announced a virtual trading competition. We are giving away $10,000 in cash. That's right, $10,000 in cash. You can sign up right now. You have until Thursday, September 25th at noontime to sign up. It's free to sign up. The only people that can't take advantage of this is folks that work for TFNN. The competition itself is going to start on Sunday, September 28th through Friday, October 3rd. Each and every day, we're going to be giving away $500 in cash. The 10 overall winners, there's a lot more than 10 winners. There's going to be a lot of winners. The biggest winners, though, this is how it goes. First place prize is going to be $3,000 cash. Second, $1,500. Third, $750. Fourth and fifth, $500 apiece. 6th through 10th, we're going to give away $2 of $50 apiece. Then what you're going to have each and every trading day. If you just participate in the trading competition, we're going to give away 5 separate $100 prizes, plus a signed copy of my book. All the details are on the front page of TFNN.com. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're coming back with our commodity expert at TFNN, our man, Mr. Andy Heck. We're going to be right back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We had the Dow Industrials finish up 100, NASDAQ up 33, S&P's up 15, as we do each and every Tuesday at 20 past the second hour. We have our man, Mr. Andy Hecht. Andy, folks, does an outstanding job each and every Tuesday and Thursday here with the Commodities Hour. That is on from 5 to 6 right after my program. You can also check out Andy's newsletter, the Technomento Commodity Report. You can test drive it free. The way you do it, go to our website at TFNN. You go to newsletters. You go to trading newsletters. You can test drive that report 1 month absolutely free. Andy Hecht, what's going on?
How you doing there, Tom?
Doing great, man. You having a good day out there?
Oh, yeah, always, always. Hey, I have two things I want to talk about today. First, I want to start with gold.
Okay.
I had an article today on Seeking Alpha.
Nice.
Which is called Short and Waiting for the Washout.
Okay.
And let me explain to you what I'm looking at in gold here. First of all, I think that with the Chinese adding liquidity to the system today, 500 billion yuan, we saw an immediate response in copper.
Yes.
I mean, copper
up 7
exploded.
pennies, right.
Yeah. Gold, I hear what you're saying about the gold stocks, but the gold was very disappointing. I think tomorrow is the line in the sand for gold. If the Fed comes out, okay, whatever they come out with, if the gold market can't manage to get away from this 1230, 2 to 1240 level, it's going to look very shaky. And there's a couple of reasons why I'm thinking this. First of all, gold's been dribbling lower since July. You know, I talk about inter-commodity spreads a lot. How I've been talking about the fact that silver is cheap relative to gold.
Yes.
Platinum is cheap relative to gold. Well, the other thing also stands true. Gold is expensive relative to silver, and gold is expensive relative to platinum. So that's kind of weighing on me. The other thing is that physical demand has been very tepid. Open interest has dropped. The amount of juice in these ETFs has dropped, the net asset values and the number of players in them. I'm just getting a little bit worried. It feels like it's teetering here. It wants to go down another $50.
Listen, you know, the bottom line is that the physical gold, can it? We know it can do anything. The aspect of how it's trading, it's teetering where it is, but I really like what it's done. And
I hear you, and it pays a lot of times to be a contrarian. There's no question.
No, I mean, you know. Inside the art of timing the trade, it's done what it should have done, okay? So what you have is this, okay? If you take a look at the GLD made the first low after a year and a half, 2 years, in June of 2013. We did that with 109 million shares. The low of that was 114, the high is 124. It goes from 114, it gets up to 137. Comes all the way back, tested again, which they love to do, 63 million. Goes topside again, 133, and then this time we came down, and the correlation for me is 36 million versus 62 million versus 109. So that's telling me that there's no more sellers at that point, So.
I hear you loud and clear. And all I'm saying, Tom, is
listen, listen, man, that's what makes the market.
And a half, at 12.47 and a half, I reverse my short position and I go long. But right now, I'm more comfortable being short than long based on the action I'm seeing.
Yeah, listen, man. What's going to happen tomorrow when this meeting comes out and what they announce comes out, and I expect it to be status quo, by the way, folks, okay, is that you're going to have the gold market move, the bond market move, and the S&Ps move.
Right. It all depends on the script. It all depends what they say, exactly how they say it, So we'll see. Tomorrow, definitely an interesting day, followed by the Scottish election, which is going to be very interesting, too.
Well, what's interesting about that? What cracks me up about that is, why is that even so important when there's only 5 million people there?
Well, it's important for the pound. That's what it's important for. I don't think it's important for anything else.
But why is
maybe wool and whiskey?
But why is it important for the pound?
Because I think that the psychological impact of Scotland leaving with some of the oil there, not that it's a lot, will be initially knee-jerk reaction down on the pound. If it's a no vote, it'll probably be.
No, I agree. I agree. This is my point, folks, okay? It is important, and the British are making the Scottish are going to be in big trouble if they leave. They're not going to be in trouble.
Of course.
They're not going to be in trouble.
They're going to make that way because they don't want them to leave because it's tax revenue based.
It's power. They own 90% of the North Sea oil, and they haven't even started fracking that oil yet.
Absolutely.
They won't even have to work.
I got a cute picture up here. Let me put this picture. I want to talk about meats, but I picked this up. A friend of mine sent this picture to me.
Okay.
Let's see if we can put it up there. See that?
Due to the increased cost of meat,
we're forced to raise the price of by $1 for all meat sandwiches.
I love it. Is that a real sign?
Yeah, it's in a deli in Boynton Beach, Florida.
That's awesome.
How great is that? Thank you to my friend Chad who supplied that picture. And now I'll make that disappear, and we'll put up the what I like to look at here, because to me the bullish and bearish factors in the hogs and in the cows are very strong. But again, I'm looking at this weekly chart in pork versus cattle, this intercommodity spread, and the momentum is shifted. And I think, here, short cattle, long hogs. It's working so far. I think it continues to work.
And so let's see where where is that cattle today? So cattle. Okay, so cattle is down slightly. Hogs are still up. Yeah. No, I see what you're saying. Right.
I mean, it's just to me, Tom, this is a consumer choice trade. It's the what's for dinner trade.
Oh, no. Listen, man, it seems that if you're going to eat meat, fish, it's going to be expensive. That's the bottom line. You know, I mean,
and if you're going to eat grains, it's going to be cheap.
Well, you saw, I mean, and grains kill you. I mean, so that's the reality. So,
well, let's put a corn chart up here. You want to look at something that's like that?
Well, did you see what Olive Garden did? I think it's Olive Garden. One of these folks, okay, they turned around, folks, and sold a pass this week. At the beginning of the week, for the first 1,000 people that went on the internet or something, was $100. You can eat as much pasta as you wanted for 30 days. It's like, really? Yeah, so then you
Why don't they make it as much filet mignon?
Yeah, well, you're going to have a sugar count up to, you know, forget it, to the moon. You're going to end up in the hospital with diabetes from eating so much pasta.
Absolutely. Absolutely. These grain markets still, you know, this crop this year is enormous. You know what the answer is? The answer is veggie burgers.
No, the answer is, hey, look, good cheeseburger is good, man. I've gone both ways, but it's wicked, man. It's when I
agree. There's nothing better, right? Especially when you're watching that football game, when you're watching your Patriots, or I'm watching my Giants lose, there's nothing better.
I think the last time I was with you, we were eating cheeseburgers, weren't we? Yeah, we were.
I think we did.
Yeah,
I think we did. So markets are interesting here.
Ooh,
tomorrow,
pizza.
Fed Day. Big week. I mean, we got the Scottish election. We got the Fed tomorrow. We got Alibaba. You know, a lot of volatility.
No doubt. Hey, what do you think of oil right here?
I tell you, Tom, I'm sticking with my conviction. The spreads are narrowing.
Yeah.
You know, big up day today. We had a big up day last week, and it was followed by a big down day.
Listen, I think
I'm
it's
not convinced. I'm still there.
Yeah, I am too. Listen, folks, you stay right there. As soon as I'm coming off in the next 30 minutes, my man, Mr. Andy Heck's going to be out there growling and prowling with you. Andy, thanks so much. Have a great one, safe one. We look forward to the show in 30 minutes.
See you guys at 5.
Okay, man. Bye-bye.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless Unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email TigerFund at TFNN.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the TFNN.com homepage or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. And, whoa, you talk about a equity get toasted and roasted after the close out here. You get Rackspace, folks. Rackspace closed at $39. This is trading at $33 right now. So what the skinny is on this is that they ended their evaluation of a merger plan. They're going to remain independent. Oh boy, people are going to take into cleaners on this one. Okay, so let's bring this back. Let's just look this. Yeah, there was nothing here anyway, which is amazing. So you're at 39. You're coming into. Let's put this on a monthly just to see how this shook out. Amazing. Yeah. So Rackspace is down from $81. You had 37.37 the month of May. That was going up, and it never reached a swing point. When you don't reach a swing point, folks, it's crucial to understand that that's when the market is not talking, walking, and squawking. So this has a high volume low at 26.18. That's where this baby's going to go. It's going to go test that high volume low. And I suspect it's not going to take many days to do it because what you're going to see out here is that in the aspect of not even one day, this announcement just come out, so this thing just got tanked. Yeah, this is pretty intense. So, yeah, it's giving back a year. It's giving back a year ASAP. Adobe, A-D-B-E, that just come out with numbers on Adobe. Adobe closed at $70.73. That's trading down $2.50. And let's see what Adobe has to say. They missed their third quarter. Adobe Systems reported fiscal third quarter revenue that missed some analyst estimates, reflecting slower than projected adoption of the software maker's cloud-based versions. Let's go to Bill in Colorado. Hey, Bill, what's going on?
Hey, Tom.
How you doing, man?
Not bad at all.
Good.
So I was looking at two different examples of major news announcements, kind of destroying the charts. And one was Kinder Morgan Inc., KMI.
Okay.
On the upside, their announcement was they were consolidating all of the companies that they own, some master limited partnerships, and putting them all under the KMI banner.
Yes.
And projecting a $2 dividend, which at 38 is a pretty good return.
Sure.
But if you look at the day of the announcement, you know, I mean, it blew up and it opened at 42.40, which would have been where your stop was executed if you were short for some reason. You know,
yeah, but you wouldn't have been, there's no reason to be short that stock.
No.
Yeah.
I'm just saying that that's the kind of event that can run straight into whatever technical picture. It's a disconcerting thing to see these kinds of events.
Okay, so let's go through it.
Explode on the charts, you know.
No, listen, I hear you loud and clear. So what I'm picking up, what he's saying, is that the integrity of the chart wasn't what would you expect, right?
Well, yeah, and AU is the opposite.
Okay, that's perfect. Let's go through the KMI first, and then we'll go through AU. So when that went topside. So what happened, folks, is that on the close on August 8th, evidently it announced something, that if you did the A to B equals C to D, it hit it perfectly. You see how that works?
Yeah.
Okay, so that worked. On a technical basis, that's an ABC. If you were in it, you get out at that point. An ABC finishes, he's going to do something other than do the same thing.
Well, it looks like a lot of people agree.
Well,
no, it's been drifting, you know.
Well, no, what we're talking about, you called up, you're saying that the integrity of the chart, and I'm picking up that you're saying that, no, it doesn't work. Am I wrong on that assumption?
Well, no, I'm just saying, once in a while, these fundamental announcements, you know, they just come in and...
I agree.
They're kind of unpredictable, or you don't know which way they're going.
I agree with you there. Unfortunately, you picked two companies. I didn't know the KMI chart, but I know the other one upside down, okay?
Yeah, I'm sure.
But so anyway, KMI is still acting correctly because it did an ABC structure up, hit 42.49. Now it's backing down with lighter volume. You know, it'll fill the gap, and, you know, you'll see the thing probably go up to 42 again. AU, now this gets really interesting because AU is in the gold report, and last week, folks, when I was saying, if you get the gold report, you know exactly what I said. I said, no. What happens is that when you reject a lower price, you still need a sign of strength. And I specifically said, no. You got to wait for a sign of strength to come in the stock to prove itself. Well, guess what? No sign of strength. So now picture this. Today's the gold report also. Now, this is where this gets really interesting. And in the context, when you're doing, you know, a lot of gold stocks and silver stocks, and, you know, I know a lot of these, I know them all technically and a lot of them fundamentally. What this was about, folks, was this. AU came out, and they wanted to do a $2.5 billion stock, $2.1 billion stock share push-out, and they wanted to split their South African assets from their international assets. Well, the stock had taken apart, goes south, and then, you know, it had closed the first day at 15. Well, it closed, the 9th at 15.49 and opened the next day at 12.75. Okay, so now check this out, though. So now I'm doing the gold report comes out on Tuesdays, folks, okay? And if you want to test drive it, you can test drive it free for a month. Go over to TFNN. And this is the time to test drive it, folks, because gold's going. So now you put it on a monthly, it's like, oh, man, this is interesting. And the reason it's so interesting on a monthly is that you have a high volume that wants to get tested. You know, you have a couple of them, actually. You have 1392, which was the high volume low of 08, 70 million shares. Then you got below that with 96 million shares. And this is where, when you do that, folks, you're going to test that level again. Now, that level is 1162. It goes all the way up to $19. So what's that? Almost like a, oh, my God, that's almost like a 90% move, right? It's going to come back and test that level. And the real key is going to be, you know, does it test it with lighter volume or not? And this is one of John Paulson's biggest holdings, folks, okay? So he got in the middle of that, and he wasn't going to vote for it, and they basically, let me see, Paulson, where is he? Oh, that's interesting.
They went around him? They overrode him?
No. They decided this is what ended up happening is that they decided. Yeah, there he is, right there. So he owns 6.5% of it. He owns 26 million shares. So what happened after they announced it, the stock gets taken apart, and then because the stock got taken apart so bad, they decided that okay, we're not going to do it. But of course, it's not going to help the chart right now or the stock right now because that stock wants to test that high volume low, which is bizarre. Wow. I know, man. It's sick. It's sick.
Yeah, interesting stuff.
Yeah. Cooking, man.
Have a good work, Tom.
Have a great one, man. Have a safe one.
You too.
And if you like to test drive the either the Gold Report or my Market Insights, folks, you can come over to our website at TFNN. If you test drive in the Gold Report, go under Investment Newsletters. If you want to test drive Market Insights, go into Trading Newsletters. As you're over at TFNN, you're going to see right on the front page we're doing a $10,000 trading contest. We're giving away $10,000. That starts, you have to sign up for it right now. It's absolutely free. It's going to be on the Nadex platform. First prize is $3,000. Second prize is $1,500. We're giving away $750 third, $500 fourth and fifth, $250 6th through the 10th, and then each and every trading day, folks, we're going to be giving away $500. So you can check that out on the front page of TFNN. And in this market, folks, if you haven't test drove the Nadex platform yet, it's a phenomenal platform. And you've heard the commercial many times, is that your trade is your stop. And we have a lot of things moving. You know, you get currencies moving, you get commodities moving, you get gold moving, and you get the S&Ps moving. The bottom line is that you can trade all those types of vehicles inside the Nadex platform. If you work, like I'm sure everyone has to work, bottom line is that that Nadex platform, folks, is trading 24 hours, 23 hours a day. So there's plenty of time to find something that you enjoy trading. The way it works is you put 25, and make sure you read the rules also, folks, because what you can't do is that you just can't take the $25,000 of paper money that we put in the account and put that all on one trade, okay? You have to actually do trades. We allow 10 contracts at a time. You can't, basically think you're going to get lucky and put 5,000 contracts on one deal. But what you can do is that you can trade different vehicles, see how they trade. And as I said, the contest itself, each and every trading day, just for participating in the contest, we're going to award 5 folks $100 a piece in cash, plus a signed copy of my book, The Art of Time of the Trade. This is Tom O'Brien. It's the TFNN. You stay right there, folks. We'll be coming right back. And, of course, coming up at 5 o'clock, our man, Mr. Andy Heck's going to be growling a problem with you. We'll be right back.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Join Andy Hecht as he teaches you how to make money in commodities. The Commodities Hour, next on TFNN.
Tom O'Brien.
Welcome back, folks. Dow Industrials finished up 100, NASDAQ up 33, S&P's up 15. After the closeout here, you got Adobe missing numbers. That's down $2.50, or now it's down $3. So there's some pressure there. Rackspace, though, Rackspace is just absolutely smoked, folks. Rackspace closed at 39, trading at 33. And when you do look at Rackspace from highs to lows, it's pretty dramatic. This was a high flyer. The stock had gone straight from $32 up to $81, and guess what? Straight down to this level again. And Rackspace does have a high volume low at 26.18. You know, when you look at the loan companies, the student loan companies, you talk about an ABC structure on the way down and just out of business. It's Corinthian College. So if you take Corinthian College and you take a look at this, this is of course, one of these funding companies that they're all fraudulent, folks, okay? Apollo looks like they're going to make it, but the bottom line is that the amount of debt that they're saddling these young kids with is insane, and it's only because the government basically backs the debt. No private company in the world would ever back this debt. Bottom line is that just on a technical basis, what you had is this. Corinthian was at a high $36 in April of 04. First leg down. Now, check this out. This is just amazing. You get the first leg down. It goes down to $9. High volume. Does a bounce. Test that low again. And then does a ABC structure on the way down. It took out the B point August of 2010. Now, when you do these, and we've done a few of these, meaning that, you look at it and say, okay, where's the ABC structure? And then the ABC structure means that, hey, guess what? You're out of business. Sure enough. The A point on this was $36. Your B was 6, so it's $30. Your C is 21. When you take 30 away from 21, guess what? You're in a minus 9. Well, we're at 10 cents. Baby's going to be out of business. I remember when BlackBerry did the same thing. It was pretty amazing. It's crazy when it actually happens because it's hard to comprehend that a stock that was trading and taking kinds of money, whether it's $50, $60, $70, $80, and monster money can actually get down into the single figures and go out of business. But guess what? It happens. If you take a look at now, check this one here. We'll bring this one because I was just looking with Coco. So Apollo is, I believe that's going to be one of the largest ones in the business. But it looks like Apollo is going to stay in business. Apollo right now, I think this is Phoenix University. Apollo takes in. This year, they expect to take in $3.1 billion. Next year, they only expect to take in $2.8 billion. So watch what happened with Apollo now when we take a look at it. This also came off the highs with volume. The high that was generated there, that was a high of $98. It comes down, does a high volume low at 35. Does a counter trend bounce up to 90. So it goes from 35 to 90 again, and guess what? Comes all the way back down into that high volume low. Now, watch what this did, though. So it went to 35.50 and had volume that month. The following month, and this is how tests come in, the following month, if you hit a swing point, no, if you don't hit the swing point and the volume comes out of the equity before the swing, watch those equities. The reason being is that all that energy has been going down, down, down before you hit the swing, and that's what happened to Apollo here. So the month of October, you went from 53 to 35, 116 million shares. The benchmark on this was 89 million. Next month, what do? Next month, you only had 66 million shares. That's when it hit 33.75, rejected lower price, bounces again. It's not that it's a buy there, but I'm just showing you what the difference is, what the correlation is. It didn't break that swing with volume. Then it came down, broke the swing with light volume. Stock still went from a price point of 56 down to 20, then down to 15. Now you're building a base. But it looks like when you take a look at Apollo, whatever they are doing or have done or changed their loaning or what, maybe they're starting to educate people now and actually get jobs. It looks like they're going to be staying in business. Tonight, okay, so let's go overseas. Let's go to China because what you did have happening, what turned around our markets intraday out here was the Chinese government putting 500 billion yuan into the system, which is 82.1 billion, which, by the way, is not that much money. If we take a look at Shanghai, and this is going to be wild watching how this shakes out, because Shanghai last night was down 1.85% with 3 billion shares. Now, when you're watching this tonight, if you only can get a test of that high, guess what? That bottom line would be saying you're coming right back down, because on Shanghai, you're at 22.96. That's a high volume spike that will get tested. So how Shanghai opens tonight is going to be crucial. If we take a look at the UK, UK went sideways to slightly lower today. No juice behind the move. The DAX in Germany. The DAX in Germany is still the huge bellwether, folks, in a big way, too. Because what you have with the DAX is that the DAX is the only indice that we follow real closely that has continued to break the first low, high-volume low that was structured out there on February 5th. And now, of course, we're into September. Each and every low got to a lower low. It made it back to the highs, but it seems like it takes almost no time to get right back down to the lows once again. Inside the XLE, the energy sector has been going south for quite a while. We had a high out here of 101. Trades down to 92 yesterday. Today, you go to up 100, well, $1.14. The XLE can do a nice counter-trend bounce up to probably about another point. And I suspect that's building cause for much lower price. ExxonMobil's the largest structure inside of that. And what you have with ExxonMobil, she bounced today on 11 million shares versus coming down with 18 million. So, and it hasn't hit its high volume low yet. The XLF, what's really intriguing here is that the XLF, meaning the banking structure itself, would make sense that could have took off with because I expect what you're going to see is that the banks in China will take off. Tomorrow, the Federal Reserve will come out with their with their speech as to what they think is going on. What I expect you're going to see there, folks, is carte blanche, status quo. Why? Because Yellen has told us a million times that even when the employment rate gets down to lows where they like to see it, it's going to be months before they go up on the rate. This is Tom O'Brien, this is TFNN. You stay right there, folks. Our man, Mr. Andy Heck, is going to be coming up. And always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Whatever you want in life, folks, visualize it like a nice big motion picture. Step into it. Take ownership of it. Fly with it. Thanks for being here, folks. Have a great night, safe night. Stay right there. Andy's coming right up. Go get him, folks.